Good morning, good afternoon, good evening. So once again, we're back for another weekly watch list heading into this week. It is going to be a very big week. We have economic news ahead of us. We have Jay Powell speaking on Tuesday and Wednesday, and then we have GDP numbers on Thursday. So it will be a week of volatility given the fact that, as you know, when Powell talks, the market moves one direction or another. So we'll talk about both sides of the equation and what I expect going forward. I will let you know I'm a little under the weather right now, so just keep that in mind as these are being presented. So apologize there, but let's jump into it. First and foremost, SPY on a weekly time frame is getting very, very close to its 200-week SMA on the weekly. So if we do get one more push down, I could see us pushing to this 200 weekly SMA and then potentially making a short-term reversal. The weekly chart, everything still suggests down. The daily chart, however, does suggest that, hey, maybe we actually get a short-term bounce here before continuing down. And with that being said, there is a hammer candle that is a trend reversal type of candle. So if we do get a bounce, I would be looking first for 373, and then I'd be looking for 382, and then 389. And if we get a sustained bounce, we have potential to get back to 396, 97 based on prior support turns to resistance. But the weekly chart still looks very, very weak. So please take that into consideration. Longer term, I still think we are working our way down to 330s here. So any short-term bounce, I expect to catch further sell-off pressure, and that's given the fact of what RSI is showing us. So we got rejection off the midline. We got a second test of RSI on the midline, and we rejected both. So as you can see, RSI is continuing to point down with the entire market. So once again, I expect this to be a continued rough end of the year. But if there is a short-term bounce potential, I think it's setting up very soon for a dead cat bounce to play back to the upside because we are down 10% over the past 2 weeks. So let's jump into the Qs. Qs are a very similar light as to SPY, except Qs have already come down, touched their 200 weekly SMA, and you can see got a nice bounce off of that. Now, obviously, this is what carried the market higher at the end of the day on Thursday or on Friday. But this is a hammer candle, and we have a gap to fill at 278, another gap to fill at 283. So if we do get any bounce back, those are going to be my main two targets for the market. If we can continue a move higher, we have 291, and then we have 300 above us. But Qs do look a little bit better than SPY overall, given the fact that it has touched its 200 week. But once again, RSI is still pointing down. Everything about the entire market is still pointing down for this to come down and test the 240s over time. Okay, so any short-term bounces I expect to get sold off. It's just how high does this short-term bounce go? And seasonality suggests it could go until mid-October. So we are at the end of September now. Seasonality suggests we could get a bounce to mid-October and then commence to new lows at the end of October. So seasonality's played out beautifully so far this year. Doesn't mean it's going to play out exactly like it is current based on the chart. But ultimately, this is what seasonality states dating back to 1946. So if we do get that bounce, I'd be looking for about 283, 42. And then once again, push through that. We have 285, 291 still to go. And those are just based on prior support, turn to resistance lines there for you. Obviously, we also want to talk about IWM. IWM has not come down to break its June lows. It doesn't have any gaps to fill. And it still has broken its 200-week SMA. So, IWM is still rather weak across the board for the market as a whole. There is also potential that this is just a massive inverted cup and handle. So once we do break our neckline around 350, it could get very weak. But once again, IWM is still very weak. Short-term bounce potential is there, but overall, high time frame still looks very, very bearish. If we do get a bounce, be looking at 175, looking at the gap of 170. But once again, I expect it to get sold off. We are pretty oversold at this point. So short-term bounce is not out of the question. Just how high do we go? All right, let's jump into the actual weekly watch list. So the first one's going to be Netflix. This is a carryover from last week, but it is still working on its cup and handle. If it does break under the 214, I think we flush right down to 200, 205 level. If we can still clear the 255 level, there is still potential for this gap fill. We are sitting right at the bottom of our potential handle. So if this starts to break down over the next few days, this is going to be a quick one. If it can hold, we'll look to see if it can break 255. Right now, it's just triple topping with no signs of actual cup and handle playing out. So keep this on watch. Probably, look for a short-term move back to 240s if market goes bullish. If not, we're looking for 200s, 205 level on Netflix. The next one's going to be Tesla. So obviously, you know that I talked about getting some TSLQ last week based on Twitter response. And so now we have moved down into support. So the question now becomes, do we break support and fill our gap, or do we bounce? If we bounce, we have a gap to fill. And then we have 290 as a potential supply, 298 as a potential supply, and then we have a really heavy supply zone back over the 300 level. So we'll see if Tesla can get a bounce here at all. If it can, great. We'll keep an eye on these targets here. If it can't, then we're still going to be working our way down to fill our gap. Bearish divergence is still very strong on this name. You can see it's on the weekly and it's on the daily. So I do expect that Tesla will continue down over the next few months. The question is, do we get a short-term bounce here or not? And if we do, I think it presents an opportunity to get short on Tesla again. So we'll keep an eye on that. The next one is my favorite play for this week, or for the next few weeks, I should say. It is solar companies. So this is the solar ETF, TAN. And this holds companies like Enphase, Plug Power, FSLR, Sunrun, any of these type of solar plays. And you can see it is breaking down at the current moment. So the weekly chart is very, very, very weak. The daily chart, if we do get a bounce back, we have a gap fill at 78, and then we have overhead resistance that could come into play around the $80, 80.50 level from there, 80.50, 80.60 level. So we'll keep an eye on that. Any bounce I expect to be presented as a great short opportunity. Once again, nothing I say is financial advice. I'm just giving you my opinions on the stock and the chart itself. We have a gap to fill down on the weekly down here at 38 that we still need to fill. So this could accelerate very, very, very quickly over the next 6 to 8 months. So I'm going to be watching this as another downside play. A bounce back to 80 would be really, really nice for a potential short, in my personal opinion. So I'll be watching TAN, once again, still watching FSLR, still watching Enphase, still watching all the individual solar names. But I want to go ahead and encompass the whole sector, given the fact of where it's at the current moment. Everything looks very, very weak. So we'll keep an eye for a bounce, and then I will probably look to get short on solar names. The next one is going to be ELF Beauty. All right. This is not a stock that I normally track, but I could not avoid it given the chart and what it looks like currently. So at the current moment, ELF is putting in higher highs and higher lows based on RSI negative divergence. Now, we haven't broken down just yet. We still have potential to bounce higher. Once again, we'll keep an eye on this 50 RSI. You can see the 50 held here and beautifully bounced. So we'll keep an eye on the 50 RSI, see if we can get another bounce on ELF. If we do, I expect that to be the last major push on ELF before it breaks down. So Breakdown targets would be 33. There's a gap to fill at 27, and there's a gap to fill down at 22. So I think this is going to be another incredible short opportunity over the next few months. You can see higher time frames. We do have negative divergence forming as well on the weekly. So I do expect this to be topping out very soon and provide for a great downside play over the next few months. Once again, I'm not a perma bear. I'm looking at downside because I want to trade in the direction of the entire market. Once the market starts getting supportive again, we'll be looking at upside plays. But right now, my focus is mostly downside plays because that's where the market is currently and where I believe it to be going in the future. The next is going to be Apple. Now, this is a potential upside play. Once again, higher time frames suggest if we do break this demand zone, we should see 130s. If we break that, we should see 110s. This broadening formation target is the 110s, so keep that on watch or in mind. But we are in a potential demand zone here with the hammer candle. So if we can get any buyers, there is potential for us to move back to 157 and even potentially the 200 SMA. If we don't get any buyers here and we just continue fading, well, guess what? We're still looking for a 130s to 110 target. That's still the higher time frame target. So once again, any short-term bounce, I believe, presents a reshortable opportunity on a lot of these names. So we'll keep an eye on Apple if we do get support on the market. But this next play is probably my favorite play if the market does get supportive. And that is going to be MU, Micron Technologies. You can see Micron is putting in a falling wedge here. All right. We have held support many times being down here, and we have rejected overhead supply with this downtrend line. So if we can sustain another move, there is potential for us to make a move back to 53.81. And if we can get through that, we can push through a gap fill around 57. Now, the weekly chart, you can see, puts in a little bit of a better picture, just given the fact of it's not as busy. But we have continued to hold this support, and every time we've continued to bounce back. So based on trend, we could see a bounce back to 53 and then even 56. If we continue and do not hold this support, I think we're on our way to 45 on a higher time frame. So keep that in mind. But this is putting in a falling wedge, which is historically a bullish setup. So we'll see if it can get any sort of push and if it can even break out or have any chance of clearing prior highs or anything like that. But that's going to be the weekly watch list going into this week. Once again, I'll be watching solar names as my primary watch. I'll be watching ELF as well as a secondary name. But that's your weekly watch list. So thanks so much for watching as always. If you did enjoy the video, please like, comment, and subscribe, and I will catch you on the next one.